Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Tuesday edition, Taco Trivia Tuesday. I did get a couple messages about the quality of the video declining significantly, and I noticed that recently as well. I'm trying to figure it out, so hopefully I will bring in a video expert to help me figure out why I can't get this video dialed in straight. It was great up until I took this camera downstairs for Halloween, and all of a sudden it doesn't work anymore. So we'll figure that one out. Apologize for the grainy video. I'll try to keep myself off of camera just because of that little piece there. So today, I guess I'll start off with the big news before I jump to our headline piece here, which is going to be talking about delisting securities. Let's talk about Bitcoin. We talked about it yesterday. Actually, we've been talking about it for the past couple weeks, but man, I just wanted to bring it up because we did break another milestone today. The future side of things is a little bit different. So I'll go to the spot price of Bitcoin, where you can see we did officially break above the 90,000 mark today. I'll go to let's say a 5-minute time frame here, and I tweeted out. I was waiting for it to happen. I was literally just waiting for that to happen, and as soon as it happened, I tweeted it out, and the next bar it just cratered. We're down $2,000 per Bitcoin since I put that tweet out saying 90,000 Bitcoin. There were a few transactions that happened over there at that 90,000 price, but that's definitely a milestone, getting very close to that 100,000 target, and things just looking absolutely fantastic. Evan, you should not come up with live. Yeah, John, I'll do it every day unless I tell you guys. Typically, we'll see. So anyway, just wanted to bring that one up. That's a pretty significant piece. Of course, it's selling off right now, but given the way that this thing's been moving, it'll probably find a base here and have another rally back up. 88,132 is where it's at right now in the spot market. Phenomenal. Let's talk about delisting. Topic du jour. So the question came in from, I have multiple questions about it, but Michael G., one of our regulars here, asked me about this one and said, what happens if your stock gets delisted? What goes on? Particularly his questions are focused around puts. So I had mentioned that I had positions on, or I had sold some puts on Super Microcomputer, SMCI. And the question now becomes, what happens if they get delisted? That's obviously one of the big concerns here. If they do get delisted, and I think someone actually thinks that they are getting delisted, we'll see. We'll see if it actually does happen. But if they do get delisted, what happens? So for example, I have the $23 strikes, which means that if it drops below $23, I will be forced to buy it as of Friday. And it could happen. If you notice on this price chart here, it looks pretty darn close to it. I'll put the $23 strike right across the bottom here so you guys can see it. All right, there's 23 bucks. So that's my horizontal red line there. Anything below that, I'm going to be forced to buy Super Microcomputer as of Friday. Now, let's say hypothetically, they come out with an announcement tomorrow that says, as of Thursday, this security gets delisted. Well, what happens to it? There's a variety of things that can happen, but the most probable outcome of this would be that whatever, it just gets removed from the NASDAQ and then put over onto an over-the-counter marketplace. When that happens, I'm still on the hook to buy at $23 regardless of what happens. So let's say the market today, well, we'll use the chart here as an example. Let's say that it delists as of today. And again, for anybody who just joined us, I'm making up a hypothetical here. What I'm saying is, let's say tomorrow they say it's going to be delisted, meaning no longer traded on the NASDAQ. So it goes over to one of the over-the-counter markets. When that happens, whatever price that is what I'm going to own it at. Yet I'm still responsible to buy it at $23. That's the strike price I said I'm willing to buy it at. Therefore, if it moves over to the over-the-counter market and it trades at $2, I will have bought it at $30 with a current valuation of $2, which means I'd be down $21 per share on that, minus the premium that I collected, which was almost $3 worth of premium. So right now, my average price on SMCI for these puts I sold expiring Friday is, I think it's $20.10 or $20.20. It's something like, I think I get $2.90 worth of premium, I believe. But we'll wait and see. Right now, it looks like I'm underwater, but with the premium I collected, I'll be okay. But if it does get delisted, I'm going to be responsible to acquire it at whatever my strike price was, regardless of what it does on the over-the-counter market. So as it goes over there and, let's say it trades at $35 premium, I'm still long from 23. I would have made a profit. So nothing will really change other than the marketplace with which it's trading at will probably have a lot less liquidity, right? Over-the-counter markets are usually very low liquidity, and because of that, you have less participation. Therefore, it could be rather volatile for me. So I'm not overly concerned with it at this point. I mean, it's Tuesday. I got a couple days left. It's been very volatile. We'll see what happens. But typically, that's what will go on when you have puts on options on a security that gets delisted. It's going to carry over into that marketplace. You're still under the same obligations. Now, sometimes they'll just straight do a cash settlement. Like if a company goes private, that's being delisted as well. So if a company like when Twitter went private, there was an official last price that it traded at. That would be your price no matter what, and then those would be cash settled. So as soon as that trade is done, the money is back in your account, right? You won't be assigned the shares. You'd be assigned the shares and they'd be cashed out immediately for a gain or a loss at the end of the day if it's something that is delisting because of a private sale or because it's going private. And in a case like Supermicro Computer, if they're delisted because they don't meet the financial requirements set forth by the exchange or specific requirements, in this case, got to have an auditor, that's one of them. If they don't have an auditor, then they simply get delisted. And if they do get an auditor, then they might be able to come back and be listed after they qualify again for the NASDAQ listing process or whatever exchange they decide to go back onto. So realistically, not much changes if it's something that gets delisted because of regulatory pieces. So for example, let's say you have a stock that, like Supermicro Computer, let's say that they don't have an auditor. Auditor resigns. They can be I can't even talk today. They can be delisted for that. They have a certain window of time where they have to find another auditor and become compliant with all the things that are required by the NASDAQ and the SEC. You can also get delisted for trading at too cheap of a value. Typically, what they're looking at is, I'll move off of my video just because it's so atrociously bad. Typically, when something gets below $5, there's a period of time, I think it was 90 days, where this security would be able to, make changes to the share valuation by split adjusting or doing reverse splits and getting their price back above $5. If you're under $5 for a specific window of time, you actually get you can be delisted. So that can happen as well. And if that happened, you would still be underneath the same constraints and obligations for your option, just on the over-the-counter market. Okay. So Michael, I hope that helped answer your question. You said, what happens if you sold puts on a stock that is delisted? In the case of Supermicro Computer, it hasn't happened yet. But if I am assigned on, let's say they get delisted sometime this week, and then Friday I get assigned, it will be at whatever the strike price is on the open over-the-counter market. Let's hope it doesn't crash, because if it does, then I'm going to be looking at a pretty significant loss there. But most likely the company would still function. It would still operate, just not on the same exchanges. So there's one big piece of today's question. Next part I have was, what was the second one? This was from Mike, and this is an interesting one. He asked me, he says, what are your thoughts on Yield Max ETFs? So all these Yield Max ETFs do, and yes, I have heard of them. There's several other families out there as well. They create a synthetic long position. So instead of actually buying the underlying security, what they do is they will sell puts, let's say Microsoft. They'll sell a put on Microsoft and also buy a call on Microsoft, essentially synthetic ownership. You get the same basic, you're still capitalizing on a specific market direction of that security, but you're not actually buying the underlier. And the rates of return on these have been pretty fantastic. Let me look at the Yield Max here. So you go look Yield Max, the whole family of these ETFs out there. The rates of return are very good. There are certain risks to these. So one sec, let me bring them up here and walk you through kind of what they do. For example, you're looking at a distribution rate on things like, let's go to, here's Apple, right? Apple, 25.57% distribution rate this year. If you look at things like Nvidia, you're 51.86%. So they actually follow fairly closely. Let me show you through stockcharts.com. And I'll line them up side by side so you can kind of see the performance here. Let's go Perf Chart. Let me bring up the Yield Max. Okay, well let's look at Coney. So I'll bring it back up here so you guys can see it, and then we'll go to Coney so you can see. Let's So there's your Coney. That's going to be Coinbase. And we will go over here and we'll do CONY. And then we're going to do Coinbase as well. So I'm going to do these on top of each other just to see what this looks like. And they should be fairly lock stock together. In this case, the Yield Max is kind of underperforming here. You can see it's actually significantly lower rate of return on this Coinbase. And all of a sudden, because of the price acceleration of Coinbase over the past couple of weeks, really separating the rates of return here. It looks like 90% rate of return for Coinbase ETF. And the actual underlier is about 143%. So usually they're fairly close together. I noticed on the Microsoft one, they were spot on. Let's go back to Microsoft or Nvidia, whichever I get to first. NVDY, we'll do that. NVDY, and you have NVDA. All right, again, these should be fairly close together. In this example, you can see they were close together, but all of a sudden, the slow pull away from the underlier versus the Yield Max. Now, I'm not sure if that's necessarily for the distributions in those, but as Tofi says here, those ETFs decay. I had one for Tesla called TSLY, and it wasn't keeping up with the underlying, just like BITO. Correct. The difference here with these ones is BITO doesn't pay a dividend, right? BITO is not paying anything out. When you look at these ETFs, while there is some decay, they're paying out a pretty hefty dividend. So Mike's question, which is a great one, is, if I dollar cost average into these, and let's say the decay costs me $10,000, so I lose $10,000 worth of decay, but I collect $29,000 worth of interest payments on the yield, I'm still net $19,000. Is that a good play? And it does pay. Yeah, I'm correct. You're correct, Tofi. BITO does pay dividend because they hold bonds in their portfolio, which is stupid because BITO should be a Bitcoin ETF, but it's got bonds in there, so it actually does have yield, but it's very small, right? I'll bring it up here in just a second. The point I'm getting at here is that the dividend for these Yield Max is significantly higher because of the premium they're collecting every time they do this synthetic strategy. So they're paying that dividend out to you. And I guess the question for Mike and others that want to look into this is that yield payment bigger than the decay factor that you get for it? In the case that Mike was telling me, he's like, look, I'm down $10,000 on my position. So I'm down 10 grand, but I've made 29 on the underlier. Therefore, I'm net 19. And I guess you have to ask yourself, is that a good enough rate of return? If it is, then it's a fine strategy. These are designed for bullish markets. So, what's the risk to these Yield Max is if you find yourselves in a really aggressive downward market and it's going past whatever strike prices they're putting, they're going to be buying back those put options at a loss because they don't want to hold the underlier. So that's where these could really start to lose, is if there's a big swing down. So let's go to Nvidia, which has not had a big swing down, but depending on what strike prices they had sold, something like this back here in September, where Nvidia went from 132 down to 100, that was probably a pretty significant chunk out of the profitability. They do really well in markets like this, where it just kind of keeps stair-stepping up, and our markets have been doing this for a long time. So at this point, I think that these guys are really good. I think that they're fine in a bullish, trending, strong market. But if we get a rollover, these Yield Max ETFs could actually put you in a pretty precarious position of the yield's not going to be that great, and then the rate of return on the underlier is going to draw you down, so you could actually take bigger losses here than you would with your normal just buying the underlier. So when do they work? They're going to work well in nice, trending, strong up markets. That's a bullish strategy, the synthetic long. Maybe they'll switch and create new instruments for bearish markets. For right now, all the Yield Max stuff I've seen has been bullish to the upside for most of the major. Why don't they buy puts? You know what? There might be a fund that pops up that they do that. Right now, the strategy for Yield Max is it's a net long, synthetic long strategy. Right? You sell those puts. If it drops down, you have enough yield from the call position that you collected to, or sorry, you're buying the call, you're giving up that. So that's where you actually end up losing. You bought the call positions, you paid for that. In theory, you sell the put in a bullish market, it goes up, you keep your bullish premium, then you bought the call, And as price moves up, that call gets more and more expensive. So it's like a double win. It's almost like a leveraged position, which is why the yields have been so great on this. You're winning on both fronts if it continues to trend to the upside. If this thing rolls over, then you're losing the premium you paid on your long call, and you have to buy back those puts at a loss because you're not allowed to hold the underlying asset. So again, these are really great in strong trending up markets. They're not good in anything that's going to be well, I guess sideways actually be okay too, but they're not going to be working in bearish markets. So just keep that in mind. If all of a sudden the market starts to roll over, these are not going to work. They're going to cost you a lot of money. So it's one of those things, I think, if you're in them now and markets are trending up like they are, so here's Nvidia, it looks fantastic. You look at Microsoft, oops. So this one's not that bad, although it's rather choppy, but it's, this big sell-off here in Microsoft from July all the way through the beginning of August, I'm sure that took a chunk out of the gains for the Yield Max ETF. If you look at things like Google, it's based off of GOGL. That obviously has been doing great right now. Why? Because it's been a nice little uptrend for the past couple months. So just keep that in mind. It's one of those things that I feel if you're holding these long term, which Mike, it sounded like you wanted to, I think you got to be careful, because if the market does roll over, and at this point I think everyone believes the market's going to go up forever, right? Because Trump's now going to be president, the economy is saved, the world is saved, we're going to have world peace, we're going to cure famine, cancer's going to go away. Everything is right in the world. I'm being sarcastic, obviously. That belief, it feels like that's what the market's pricing in, just absolute utopia. However, you all know that there will be some significant pullbacks here. We don't know exactly what the future holds, and there may be some black swan events too. So if you're in these synthetic long option strategies, just be careful. And I would say make sure you have a stop loss on them, because if the markets do roll over, the decay and the value loss of the underlier could destroy those positions. So be very careful. Maybe they'd work better in bearish markets. They're going down anyway, and then the underlying price goes down too. Yeah, I mean, you're saying if you're going to short them, sure. Could you short things like, the was NVDY? Bring it up here. Could you short these? Yeah. I would just be really careful. You're dealing with leverage instruments again, and the decay is actually going to help out in your favor if you're shorting things like this. Tofi, you're right, and the market makes us all feel like geniuses. That it does. The market makes everyone feel like a genius until it really doubles down and makes you feel like a complete moron, like you're just a total loser. You're like, God, I suck at this. Just don't let that happen. Don't let it get to you that way. But yes, if your broker will allow you to borrow them, one of the negatives of these ETFs is some of them don't have a lot of liquidity. Now, this one's okay. It looks like it's trading at least $1 million a day, $1 million or so per day. But like, look at DISO. Let's bring up DISO. DISO traded 7,000 shares today. So you have liquidity issues on this one as well. There's just not a lot of volume going on. So you got keep that in consideration. The big ones like the Google, the Microsoft, the Nvidia, those had pretty decent liquidity, but I think they just stretched out a little bit too far with their offerings here. Things like Disney, you got Netflix, Microsoft, and ExxonMobil. I mean, the rates of return are really good. It's hard to look at this and not feel tempted to jump into it. Just remember that if these things start to roll over, it could be very, very bad for you. So be careful. Great question out there, Mike. I'm glad you sent that one in. Sorry I didn't get to it sooner. It's been just absolutely insane over here. Let's see. Toby says, speaking of synthetics, would you be able to go over the BFF? No. No, I'm saving that for that. That's a Lisa Lori options basics, easy options strategy for mastermind. So I won't do that one here. I'll save that for their group or for Trading Academy in their options class. So I'm not going to go over specific BFF combos. All right, what else do we have out there for today? So I'm going to run through some of the positions and things that I have going on in my portfolio just so we can keep up to date on those. Obviously, my SMCI is not looking very good right now, but I'm okay with it. It's not the end of the world. Like I say, if it gets down below 20, then I'll be losing on that position. But right now, I'm okay with the premium that I collected, so we're good there. The interesting one for me, and this is going to come right down to the wire, is Rivian. So I don't know if you guys saw what happened with Rivian. Rivian was down 4% today. It was starting to look pretty weak. I was like, oh, weird. It looked like we were rallying to the upside and felt confident, and today we took a nice drop. They just made an announcement after hours today that they're getting more funding from Volkswagen, which will bail them out, keep them liquid, and which to me is great, right? It's great that they get more funding. You notice right now they're up 5.77% in the after hours. They're at 11.19. As I mentioned, my options expire on Friday at 11.50. So I really want it to stay below 11.50. Either way, it will turn out to be a great trade for me. Even though I've been underwater for 2 months now, or a month and a half, still totally fine with this. Been selling calls against this position, collecting my premium. I mean, my dollar cost average price is sub $10 at this point. So, even if I were to close it out right now at 11.20, I'd have a great rate of return for the past 2.5 months. We'll see. Like I said, my dream would be that this closes at 11.49 on Friday. And then I'll sell next Friday's probably the $12 strike prices, collect a lot of premium there, and just keep stair-stepping up if this thing does get a nice trend. Good news is, again, they're getting more money from Volkswagen, which will definitely shore up any shortfalls they have and keep them afloat longer and longer and longer. They're doing more and more ads over here in Southern California, and it's looking pretty darn good. I saw you disappeared from me. Yes, window dressing is a pretty popular topic about adjusting the numbers, but we'll maybe not today. I'll see if I can do that one for you guys at another time. So let's see. That was it at SMCI. Oh, one that I've been looking at, and I haven't pulled the trigger yet. You guys know I had sold the Boeing 140 puts a while back. I didn't reopen a new position. And you can see what's going on with Boeing here. It's been drifting lower and lower and lower. Today, we hit an intraday low on Boeing of 143.85. I may revisit this one. I'm going to wait till Friday. I've got most of my, all my positions are like covered calls. Not covered calls, excuse me. Cash secured positions. So most of my positions are like if let's say I sell 10 puts on Boeing, Boeing trading at 145. Let's say I do the 140 strike price and I sell 10 puts. Then I'm looking at 1,000 shares of this. I better have $145,000 in cash. So anytime I sell puts, I am always making sure it's cash secured. I don't use leverage there. I always go just straight cash. And that's the same thing if I'm calls or whatever. I want to make sure my positions are covered. So most of my capital right now is deployed for open options trades. If Friday rolls along and I see that a lot of my options are going to expire worthless, I may actually revisit this doing the 140s on a weekly basis. And I know it's really close to where we currently are, but the premium will probably be rather delicious. So I'll have to wait and see how we go. But again, Boeing, I think, is one of those companies that's too big to fail. Trump is going to be positive on defense stocks. I think he'll work on Boeing, so I think we'll be long-term okay on Boeing. So I'm keeping my eye on that one. And what was the other one I was looking at? There were a couple other companies like Starbucks. I wanted to buy some. However, it just hasn't filled that gap yet. I think we got a little bit of a problem there. The new CEO, I think, is going to do a great job and kind of get this company back on track. Nike was another one that I was checking out. Again, these were companies, big name companies that had really bad earnings, got crushed, and fell out of favor for a little bit, and now started clawing their way back. So right now you've got Nike, which is down to $76 and change. That's a pretty steep drop from the $90 price target it had just 3 weeks ago. So Nike may be coming into my radar as well, probably around the $70 strike price. I'll try to do weeklies, maybe go out 30 days, but nothing more than 30 days. And those are kind of the ones I'm focusing on right now. Let me run through our top 8 here. We had talked about these markets kind of getting ripe for a pullback. Look out for Kava. Kava Group. Wow, what a chart. Goodness. That is pretty awesome. Oh, Kava Group, huh? All right. Looking out for it. I'll have to do a little more research on what the heck they do. But let's go back to that Russell 2000. We talked about these markets having a pullback. You look at what happened here with the Russell 2000, and you had this big surge up. You had 2 days worth of hesitation, then another breakout. This brings more people to the upside, into the trade long, and all of a sudden it came screaming back down today. It's down 1.77%. My feeling is it's probably going to stall here, right at this area of the breakout, right? Coming back into the base price and then bouncing out. So anything below 2,386 on the Russell 2000, that's a short him if you got him kind of scenario for me, but I do think you'll see it hold. It really depends on what the market feels next couple days, right? We have big inflation numbers coming out this week, starting tomorrow, which will be, I don't know which way these markets are going to go. There's a lot of talk about inflation coming back. We talked about that with Bill Addis. We talked about it with other guests as well, including Larry. And I think the expectation is that inflation is going to start to increase here. That's why we're seeing the 10-year yield surge more. It was one of the biggest gainers today in our market was the 10-year yield. So we jumped today. Let's give you the actual, the yield jumped 2.16% to 4.43 for the 10-year. Now, as that continues to move up, right, that is more an indication of inflation being a factor down the road. So all in all, not painting a great picture. And if inflation does start to rear its ugly head, we could see a deeper correction here than what we're seeing on a one-day. But we'll see what CPI comes out, I believe, tomorrow. And I think Thursday or Friday, I think it's Thursday. I'll verify for you guys right now. Wednesday is CPI, and then usually the next day. So Thursday is your PPI. And they're actually expecting the core number or PPI to rise quite a bit. The PPI number was 0, no change, and now all of a sudden they're thinking it's going to be 0.2%, so 0.2% gain. But the CPI number, which comes out tomorrow, they're looking at a year-over-year jump from 2.4% to 2.6%. Not the greatest numbers to see all of a sudden start to tick back up. And of course, this comes on the heels of the Bill Addis show where he's like, they didn't even reach their mandate. They said 2%, they didn't get there. They kind of doing themselves a disservice by cutting rates so aggressively when inflation has not reached its target. So we'll see how this one transpires. Again, that will happen tomorrow before market opens, but let me get back to our top 7 here, and then we'll go to some questions, and I'll wrap it up. No, I didn't, Christian. I did not short the ES. I was teaching crypto this morning, which was a very interesting topic. We get just so much to talk about with crypto and digital assets. So my crypto class this morning was all free form, which I tend to do every couple of weeks. So there is your gold chart. Again, that rising dollar, falling gold. We did break below 2,618, which was that line in the sand we established yesterday. The tricky part on this is you kind of feel like you have stair steps down because you have this. Let me put a little box around this one here. Let's see. There's my rectangle, and you look at this area right here, which we are in at the present moment, right? That's kind of this last area of sideways consolidation that goes all the way back to September 13th through the 19th. So you had some sideways consolidation, then it broke out to the upside, and we're in that right now. So I could see many different arguments as why it may stop here, but not looking good, right? We just finally broke this intermediate swing low. That's not a good sign. Or you can make the argument the trend is still up, and that it is, but today's action changes the story just a little bit. It means that there's weakness in there. It's no longer making higher lows. It actually broke those lows, which is a bearish sign. That is a first point of weakness for me. The second half would happen if we break down below 2572 on gold. All in all, not looking great. And I saw a comment come through here. Oh, you deleted it, Oliver. I thought you deleted it. So that was your gold. Let's look at SLV as well, just so I can have that one up there. You're seeing a pretty good pullback in SLV. It was up to almost $32. Right back here on October 22nd, we hit 31.80. Now you're at 28. So down 10% already just in the past 2 weeks. We are coming right into this low point from October 9th, which would be the logical stopping point here. So maybe some hesitation. If not, I think we'll be targeting these lows back around 25, which would make me happy again. Get me back down to 19. Let me sell those $19 puts again and collect a lot of premium. I'd be happy with that. I'm not hedging on gold. No, I wouldn't either right now. And this is why I love the macro side of trading and investing is you understand that the probability of the dollar rising is actually pretty good because the long-term yields are rising, which means foreigners need to buy U.S. dollars to buy these bonds that are giving you better yields. That means the dollar will most likely continue to increase. If the dollar likely increases, that means weakness in oil. That means weakness in gold. Not a good thing. Not good. Well, I guess it depends on if you're long or short, right? So that was gold, S&P, which I did not trade today. A little bit of a rollover. I wanted to, right? We had this line over here at 6,000. Said if it gets down below 6,000, there's your short opportunity. Well, we did today, right? You had a nice little breakdown. It was actually 6,013 was the line in the sand. And we broke down below that today. Now we closed right at it. So it bounced back up pretty quickly. it does feel like there should be more of a correction on this giant move that happened over the past week, but markets, you never know. Unfortunately, I was not there for this one. I was busy teaching and creating content, so it cost me a little bit of money there, but it's okay. The overall gains for crypto have offset that missed trade. NASDAQ, you notice what's going on here. I mean, if you look at this price chart, I think it's a very interesting 3 days for the NASDAQ. It feels like people want to take profit, right? Look at that picture. Let me zoom in, and for those who might be new to trading, I'm going to put a yellow box around the whole area. I know it hides those tails, but if you look at those tails on the NASDAQ from Friday, yesterday, and today, notice that we have no real clear direction, meaning the body, that red candle that you see there, red or green, whatever color it is, that's the difference between where it opened and where it closed at. They call that the real body. The real body in the last 3 candles has been very small, meaning indecision. People aren't really sure where it's going to go, no real strong conviction of market direction. That's not a great sign. What is a good sign for anybody here who's bullish? Actually, let me do a poll here real quick, just because I'm going to get you guys engaged. Let's start a poll, and I'm just going to say for the next 2 weeks. Oops, I guess I should put it in here. For the next 2 weeks, are you? And I'm going to put it right there. Right, Oliver? That's what it is. Bullish. Bearish. All right, there you go. So there's your poll. Sorry if there's typos. I was typing that thing very quickly. For the next 2 weeks, and again, it's short term. Are you bullish? Are you bearish? Or are you staying on the sidelines, staying out? Thomasina taking off? Got to run. All right, hey, have a great day. Thanks, Thomasina, for joining us today. If you look at that picture here of the markets, and again, I don't know with any, with high certainty which way it's going to go, but these bottoming tails today, the last 3 days, tell me that the markets have tried to sell this off. Those longer tails there are pushing lower. However, they always come bouncing back up. So while there is some selling pressure, remember at one point, each one of these candles was a giant red one, or not a giant one, but a large red candle. So what this tells me is, yes, there was sell-offs, but by the end of the day, buyers came back and pushed it higher. And yes, the markets were very slightly down, but considering how much they were down. So for example, let's take today. At one point today, the NASDAQ was down 0.77%. And then for whatever reason, buyers just came storming back and closed it really down 0.13. Same thing on the day before, right? At one point on Monday, we were down 0.63%, but the buyers came back in at the end and we're only down 0.06%. So yes, they're down, but it's this action from these tails telling me that buyers are still there. They're not letting it fall. So keep your eye on that. This is a sign of strength. So you have this big impulse move, a little bit of profit taking, but not much. And you can see buyers here. I got to put if I could take the poll with you guys, I'll end the poll. Only 20 votes. I got over 100 people in here and I got no vote. Only 20 votes. Come on, people. It's about having fun. Okay, I'm going to cancel the poll. And here you go. So 65% of you said that you were bullish on it, 20% bearish, and 15% said staying out. Great. I think that in a situation like this, you got to go with what the trend is. The trend is clearly the upside, the optimism of the upside, and those candles are positive. So I would be bullish. My camp would be bullish. However, if we drop below, let's say the tail of yet today, let's move this down just a hair. If we drop below this point right around 21,000, then I might have to reconsider. And I have a feeling that if momentum does break these lows, it'll start to pick up and really start to drop quickly. But all in all, I would say this is a very bullish one. That's right, Lisa. Hit that dang like button. I don't do a lot of gratuitous self-promotion, so my apologies. But yeah, hit that like button. It hasn't broken the halfway mark of the last long green. It hasn't broken. It's close. Its tail hit it over here. Let's see what else we got. Nvidia earnings on the 20th has me thinking bullish. Kenny, that's an interesting point. So let's look at Nvidia. So it's on the 20th. You guys can see right. No. There's the 20th. Okay, we already had the vertical line there waiting for this one to happen. I'll get rid of that line there. we'll do a poll maybe. I'll do it tomorrow when I have some time to set it up. But if you look at this one, their earnings are going to be on the 20th after market close. And I think there's a lot riding on this one. What has me a little nervous is things like Super Microcomputer and some of the comments by some of these other big firms like Google and Microsoft and Apple talking about CapEx spending going down a little bit. If Nvidia really misses the mark, it could have pretty profound impacts on the market. Now, you listen to Jensen Huang saying we have unbelievable demand for our products, and rightfully so. They're the only shop in town that has such great processors that can do all this AI stuff. So I don't know. I'm on the camp of I think you got to be extremely careful trading on Wednesday, and just kind of wait for that earnings announcement. I would not be messing around with Nvidia personally. I think it's just too risky. Although I say that, we'll see what happens as we get closer to it. But yeah, it'll be a really, really interesting one when we get to their earnings next week. Where would I at? I almost got to the top of the list here. We made it to the NASDAQ. We didn't make it to crude oil. Crude oil had that just aggressive 2-day slide. Today paused, although it tried to rally up and then came crashing back down. So let's see if these lows that we've seen for the past couple months hold. Right now, I don't see any real clear direction in crude oil at all. Dollar index, I do there. We talked about this a couple days ago, probably getting up to that 106 mark, and notice where we shot up to. We are up quite a bit in just the last 2 sessions here, and that dotted red line or dash red line, that was our next stop. That's be the beginning of a supply zone. So all in all, for me, what it tells me, or what it makes me think, is we'll have a small little pullback here, and then we're going to charge again and break through these highs, and then all of a sudden we'll be at 106.50, and then we'll be back up here at 107. So look at 50-cent increments on that dollar. Remember, the stronger this thing gets, the weaker it is for the equity markets, and the weaker it is for commodities as well. So this is going to be a really important factor over the next few months, is what happens with this dollar. The about face in the dollar index in the past couple weeks is just phenomenal. Really, the month of October and all the way through today, incredibly bullish move for the dollar index, and we'll see. Yeah, crazy. All right, and then, of course, number 2 on the list was Bitcoin, which did... Oh, that's the futures market. I thought the spot market was back up over 90,000. I was like, right on. The futures right now trading over 90,000. They hit an intraday high of 90,725, and right now we're at 90,090. Let's go to the spot, which is more important. Yeah, we're at 88.3. So down a bit off the peak, but still great move up today for Bitcoin, challenging the highs, making all-time highs as well, and a lot of other stuff ripping to the upside. Really, a lot of meme coins were flying today. You saw things like Pepe Coin up 10%, Dogecoin 9%. Of course, I can make fun of them all I want. They still move to the upside here. All right, let's see. What else do I have? Had to buy heating oil today. I was happy prices had come down, paid $2.50 a gallon. Nice. Load up that heating oil, get ready for winter. And our final one, which we already looked at here, that was the U.S. 10-year. I showed you that one already. It had a pretty significant move up, although did not break above this 4.5. So that, to me, is what's in play, is that 4.5% mark. At this rate, I think we'll see it hit there in the next couple of days. The trend is your friend to the bend at the end. And then, that's right, Chris, Bitcoin, baby. Absolutely. Just love it. It was great to see it break above that 90,000 mark, although it was so brief, guys. It was so brief. It literally broke above and then immediately came down. I'll put this on a 1-minute time frame just so you can laugh at it, because I was all excited. I'm like, here we go, 90,000. Yeah, there it is. You can see right here at the top. It just tiptoed above it. It had a couple of prints and then really just went into free fall after that. Talk about a bull trap, right? Gets everybody excited. Here we go, breaking out, and bam, just got crushed. MicroStrategy rocking as well, yeah. It's funny because Peter Schiff is going after MicroStrategy. He's totally just slamming it. Of course, Peter Schiff is Mr. Goldbug. His argument, and he's right. What is Saylor doing? Saylor is issuing debt. He's saying, I will pay you a higher yield than market. I'll pay you 6.5% yield, which is better than you're going to get at your Ally Financial, your Chase, Wachovia. You're not getting that in any CD. So you get 6.5% yield by committing in, let's say you buy $10,000 worth of their bonds. They take that $10,000, they buy Bitcoin with it. And all they care about is that Bitcoin has a greater appreciation than 6.5%, which it has. So the more he buys, the more he takes out of circulation, the higher price goes. Then he borrows more money and he drives price up even more. So it's not a Ponzi scheme, but it's mechanically inflating the price of Bitcoin. It's by design. You borrow money, you buy Bitcoin, you drive the price up, you take those Bitcoin you purchased, you take them out of circulation, and then you do it all over again. And in theory, you're going to continue to drive the price of Bitcoin higher and higher and higher. So for Big Eb and many of you who own Bitcoin, Chris here, that own Bitcoin long, right now, Michael Saylor, you want to put his picture above your, on your nightstand right there. It's like, Mr. Saylor, you just keep buying Bitcoin, will you? Yeah, BlackRock's buying, that's fine. But you got this company which is doing something nobody else is doing, right? BlackRock is buying Bitcoin because customers are coming to buy IBIT. They're buying the ETF. They have to buy it. MicroStrategy is saying, we're just going to make money we're going to borrow from everybody on earth that will lend it to us, and then we'll sell bonds, we'll buy more Bitcoin and drive the price even higher, therefore getting higher than a 6.5% rate of return per year. It's brilliant. When will Michael start to sell? Great question. It's something to think about, because if he does start to sell off his Bitcoin holdings, we could see a pretty significant decline. And who knows, maybe he's one of these guys that follows the 4-year cycle, and that's one of the catalysts for next year's sell-off. I don't know. I'm hoping he doesn't. I'm optimistic he's going to hold it for a long time. I think that he's playing the long-term game. And if Michael Saylor in his mind is correct that Bitcoin's going to get to over $1 million, Kathy Wood said 3 million. I think Lee said it was going to get to 3.5 million. He's just going to be laughing all the way to the bank, because the MicroStrategy might be one of the most valuable companies in the world. Yeah, see, Mark, here's the thing. Saylor says he will never sell, but Saylor doesn't own those Bitcoin. That Bitcoin is MicroStrategy's Bitcoin. So, we kind of tie these things together and say, oh, well, Michael Saylor is MicroStrategy. No, he's the face of it, but he does not have a controlling interest in that company. Just wait till entire countries as well as large companies start to stack Bitcoin. OTC supply will probably getting close to exhaustion. 100%, John. 100%. That's one of the things I talked about today in my class was, if you look at not only the adoption, but if Trump gets those rules and he gives clarity to the SEC, call this a security, call it a commodity, whatever, just make it clear, and we get those rules in place, then businesses can now accept these cryptos as payments, because there's no longer any confusion. You're not going to get in trouble with the feds for holding Bitcoin on your balance sheet as a bank. You also have the Bank of International Settlements is saying that in the year January 1st, 2026, central banks around the world will now be able to hold 1% of their, banks around the world, banks will now be able to hold 1% of their assets, tier 1 capital, 1% of their tier 1 capital in crypto. So if you look at somebody like JP Morgan, who has $279 billion in tier 1 capital, well, 1% of that is $2.79 billion. So they could theoretically, completely in line with all financial regulations, hold $2.7 billion worth of Bitcoin, and no regulator, no central banking authority is going to have any problem with that at all. To me, that's crazy. Hey, Pepe, good to see you, my friend. Good to see you. So, yeah, I think you've got a lot of factors here. Again, everybody here knows I am overtly bullish on it for the next year anyway. Very bullish on it. All right, let me go into, I saw Detroit is the biggest city that accepts crypto in the U.S. Wow. Right on. I'm going to be working with the new owners of Trading Academy and seeing if we can get crypto payments accepted. Right? Again, their big skepticism is if I allow payments from students for courses in crypto, then I'm holding an extremely volatile asset, and that kind of messes up the financials, right? I don't know exactly. However, there's all kinds of different services you can use where if you were to pay, let's say us in Bitcoin, it automatically gets converted into US dollars. So that risk is taken out. But there's a fee. There's a fee associated with that. Did the Bank of New York get to go ahead and buy Bitcoin? That I don't know, Mark. I don't know. Yep, we had a change of leadership at OTA. Yep, it's now TA, Trading Academy. Yep. Trump will figure it out. He has a lot to gain with his crypto. Yes, he does. And I make the point. There's definitely some self-interest in Trump's behalf of making this all work. He's got skin in the game, so he's going to good. Well, Kevin Young is he's run Minnesota. So Kevin Young is the new chief, and love him. Great guy. All about it's funny, we've had meetings and he goes, I care about one thing and one thing only, and that's student success. And I'm like, that's where I want your mind to be. It's not profits, it's student success. So, yeah. Kevin Young. Maybe we'll get him on, but he's not a camera guy. He doesn't like cameras. It's private. It's private. Yeah, no, there's no public. This won't be public. There's no ambition or drive to go public. No, private. All right, let's go to your economic calendar. And I've already kind of gone through the pieces for tomorrow. There wasn't really anything that exciting today, but if you look here, you can see a couple of red factories. That is the CPI number, which I mentioned. Again, the expectation is we're going to lift off a little bit by 0.2%, all right? Get from 2.4 to 2.6. You also have a lot of members, so be really careful tomorrow if you're active day trading, because you might see wild swings based off of any comment from Kashgari, Logan, Muslim, and Schmidt. You know, they can create wild swings off a comment on what they're thinking and what's their stance on why they're cutting 25 basis points. Is there dissension, right? That type of information becomes pretty important for our markets going forward. And then on the earnings front, there are a couple of big earnings, but I didn't have that one ready for you, so let me bring up the calendar so you guys can see that one. We're successful as students. Well, hopefully you're successful as traders on your own. Here is your earnings calendar for tomorrow. We talked about this the other day. We've got Cisco Systems is probably the biggest name out there. You've got Nucor. Yeah, that's pretty much it. Most of these are not the biggest names. I don't see any names here that really just jump off the page at me. So Cisco Systems is your big one for tomorrow. And then, of course, Thursday we have Home Depot. Oh, there we go. Yeah, as far as opening centers, right now it's about kind of regrouping, getting the team all assembled, getting mission focused, and then at some point we would love to get back to expansion. I really liked it when we had 100 centers or something. I forget how many. I think 50 centers all around the world. I'd like to get back to that, but that's obviously a much bigger plan. But we'll take it step by step. Lisa says, student success equals students making money, trading using the strategies they learned at TA, and being able to pay for the classes they took. Yep. Student success is, in our mind, is achieving their financial goals through trading and investing, whatever those goals may be. So, yeah, that's the goal. Why is the Fed cutting rates if the market's at all-time highs? It's a great question, Robert. Great question. Who knows? I shake my head at it. I don't believe they should be cutting. I thought they should have held at 5.5% and stayed there until things started to look right in line with what their expectations are. I think it's political pressure. I think you want to juice the markets and make sure that that the economy looks great for the current administration. Unfortunately, that didn't work out so well. I think there were other decisions that were made that may have cost them the election and cost the Senate and the House of Representatives and the presidency to move over to red. But we'll see what happens down the road, and maybe this new administration will do a great job and America will prosper. That's the ultimate goal. Regardless of who's leading it, I want the country to thrive and the people thrive as well. And time will tell there. These 5 p.m. sessions, XLTs, keep us all engaged. Yeah, that's what they're supposed to do. Yep. Total politics and lowering the rates. Yeah, I'm pretty sure. Show the Doge chart. You want to see the Doge chart? Okay. You mean the Department of Government Efficiency chart? Let's bring up Doge. It was up another 10% today. I mean, at one point it was up much more than that, but gave back a lot of those gains today. So there's your Doge chart. Just screaming to the upside. There's a lot of really bullish cryptos out there. Here's Stellar Lumens. This is one that a lot of people have been asking me about, and I'm more bullish on Stellar Lumens than I am Ripple. Ripple was up 17% today, so that's great. Again, I have a large position to Ripple, so I'm excited about that, but we'll see. All right, that's going to do it, guys. I got to wrap up. Got other things I need to take care of. Hope you enjoyed today's show. Michael G., thank you for those questions on delisting, and Mike, thank you for your comments on Yield Max. Interesting new product out there. I'd say they're very risky. I mean, it's nice when you got the big yields coming in, but just like it's that balance. You can't get more reward without taking on more risk. And in those Yield Max ones, the risk is sudden downward move in the market causes those things to lose value very, very quickly. So thank you. Yes, the Coin 50 index, that's now released by Coinbase. About time. Coinbase should have been doing this a long time ago. CoinDesk tried to do this and create indexes that everyone used, but Coinbase has the muscle, which will basically track a basket of goods. So any meme coin millionaires here? I'm sure there's a few. All right, guys, that's going to do it for me. Thank you so much. Hope you enjoyed it. If you have anything you want me to discuss on tomorrow's show, tradermerlin@gmail.com, or go down below any of the YouTube videos, and I will get to those then. Take care, everybody.